Hey, 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 true scalpers, welcome, welcome. To another true scalping stream with the Mohawk Forex team, live here from London and somewhere in
Live
America.
from Iowa.
Iowa, it is.
Yeah, Iowa. Nothing up here.
Beautiful.
Yeah,
Except true scalpers.
yeah, but
Welcome, welcome. So, yeah, www.mohawkforex.com is the website if you want to join our team and learn the art of true scalping and have access to our trading system that you see before you on the screen. And today, of course, is all about inflation, 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 inflation. So everyone's going on about, and quite a, well, they're saying it's the peak. Oh, in fact, I'm just going to end the trade, thank you, because I just took a nice little win there on NAS. Out that trade, thank you. As you can see, that NAS drop there. Stochastic red, RSI red. I just took a cheeky trade while talking. Sorry to be so rude, but I got $50. But yeah, inflation is the main thing today. Now, what they're looking for and predicting is that it's flatlined and that actually it's on its way down, possibly. That is the consensus. So this could be interesting because for the last few months, obviously, it's been predicted to go higher. It has done, and markets have reacted a bit iffy because they kind of knew it was going to happen. Whereas today, as you can see, and if you're watching Bloomberg, CNN, or whatever, the year-on-year rate is meant to be coming from the high of 8.5 down to 8.1, and the core inflation rate, which is just as important, down from 6.5 to 6. So a lot of people are saying it could be wrong and this could be higher. Now, if it is, markets will fly. Which direction? We don't know. Usually higher, but you've got to be wary of all that manipulation as we are pre-open. This is a very interesting report because every month, last 3 or 4 months, it's just been higher, 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 as we all know. We're all feeling it, even in the UK here, inflation, you know, cost of everything. But then about the cost of fuel in America now. Is it $4.40 a gallon? Is what you'll be able to say that, Justin?
that's about the average over here. Let's not even talk about diesel. We're above $5 a gallon, 5.20 to 5.60, depending on where you're at. It's ridiculous.
Crazy.
Yep.
So, and this is what is affecting everybody. I'm just going to post that because this is what it's all about, is basically, you know, how it hurts your pocket. And so they're looking for it to have peaked and obviously flatline and slowly edge back down as obviously the interest rates kick in with about 75 basis points and higher, whatever, you know, but it's already starting possibly to take effect, but who knows? Like I say, we don't know. If it's lower, we can see the markets coming lower. If it's higher, we could see them going higher. This is usually how it works, but not always guaranteed. If you click into my FX book, everyone uses for your news, it tells you there a higher than expected figure is positive for the dollar, lower, blah, blah, blah. And as you can see, they're gradually increasing in inflation this year, you know, last year and all the way up. So they're expecting a flat, that's what they want, a flat line. But if it's not, then it's trouble for Biden and more trouble for everybody. So this is going to be an interesting result. And we've got 5 minutes to go, and then we will trade this the open. And then if we've time, we will hang around to trade the crude oil because we've got a nice one on the API oil news tonight. It's the EIA today. And the gasoline, which I will leave alone because I love it, but the spreads are crazy at the moment, and you need a big account. Trading today with how I grew my account, which I started with £1,000 at the beginning of the week, and now we're up to 2,077.91 pence. So that's what I'm going to be continuing with. Obviously, any profits at the end of the week I will take out. So we've got a slightly bigger account, you know, not huge, 2,000. But still wouldn't really want to trade gas with that because that can easily be blown in about a second. There we go. Look, as you can see, Bloomberg are estimated 8.1 ties up my FX book. So you see here, Just got that sell on NAS before it spiked up. Cheeky little sell there that I jumped in on. Again, see, once a stochastic goes green, from red to green, you end the trade. That's how, if you're following that strategy, how you should do it. Enter the trade, then get out. Especially now we're so near, we just don't know what's going to happen with any of the markets.
Joining us very, very shortly. Futures up by a little more than 1% on the S&P, and the Nasdaq up by 1.4. Yields are not higher; they are lower for a.
Everything's pulling back, as you can see. Look, US 30 was in a decline. There was a nice sell you could have grabbed there. Our blue zone got you out of the trade, and then the stochastic also got you out of the trade as well. So quite a nice simple entry exit on that one. That's after a nice bull this morning. DAX did it, US 30 did it. That's it. We've got a couple of minutes to go. We're in on US 30 on this. Let's have a look. So we've got 2 minutes to go for the news. Just going to log in with IC Markets, which is my broker. Justin uses LQFX for you guys in the States who don't get access or can't get access to IC Markets. I'm using a leverage of 1 to 500 today. Of course, we're on a 3-minute time frame. Let's see what we can get. And usually, you know, US 30 likes to go the reverse of the news. But that's in times of old. We change as the markets change. We don't know how this reaction is going to be. It could just steam straight up and straight down. Just depends on this result. As expected, could be a bit of a mix. I don't think it will. Could be a surprise. We sat here. 30. I am going for 3 lots, which is 0.3 on most brokers. So that is 30 cents a pip. See, I'm looking for that magical 80 to points. So, you know, $30, $20 to $30 per trade would do nicely. Nothing crazy, because we're going to do multiple trades later on. So here we go. Good luck, everybody.
Mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching?
30 seconds left.
Omicron. Because as we know, many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at the majority of the studies done, uses a
Go.
number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize.
Let's see what we get.
Grateful here today that the virus Omicron variant.
4 seconds. 3, 2, 1.
As its main entry, it means that all of the vaccines which are designed.
Oh, and we're 8.3. It's higher than predicted. So there you go. Watch that move now. Look at that drop. What a drop. Watch it pull back. We'll try and get in. What a drop. Ooh, look at that drop. Look at it fall, man. Trying to clear out and trying to get as many in as possible. Look at that drop.
Woo!
Yeah.
DAX dropped too.
Yeah, everything's dropped.
Boy.
We're loading as many.
So much for that flat line.
Yeah. Jesus, look at that drop.
Not this time. Golly.
Best seats in the house for business's greatest minds.
I don't know how many positions have gone away. We're trying to add it all up. I had it preset. I managed to do 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trades I did in 41 seconds. True scalping, bro. And there we go. Yeah, I entered the first one in 16 minutes. I got 112, 60, 20, 23, 21, 23, 20, 36, 20. So, look at that drop.
Massive.
Seconds away, moments away from inflation data in America. From
Ooh, that was better than NFP.
Good morning to you.
Man,
Coming into that information, that data
it's amazing.
futures up by 1%.
That's like an NFP candle.
On the Nasdaq 100 up
Yeah,
by
that's the
0.8%.
best trades I've had for a long
Here's
time.
Mike McKee.
That pushed
Here
down.
we go, John. CPI on a month-over-month basis up 0.3%, which is certainly down from 1.2% last month, but a little bit ahead of the forecast. The
Love how they play it down.
Less food and energy. The core up
Woohoo, look at
0.6.
that.
Now, that
What a
is an
winner.
upside
Chicken dinner.
miss that is not going to make markets or the Fed happy.
It's going to push down
Beers
lower.
up for that.
0.3 in the prior month. On a year-over-year basis, we're at 8.3%.
That spiked down.
That comes down from 8.5%, and core is at 6.2%. That comes down from 6.5%. Now, the thing to keep in mind is those year-over-year figures
Going to push
are
down.
based on a base. The drop is based on a base effect.
That
The fact
neutral
that inflation
support.
was so high in
We're
these
going to get
months
any more
last year,
sales.
it was mechanically going to fall, but the month-over-month numbers come in a little hotter than the Fed expected. Right now,
Yeah, I told you, it'd be wrong.
It looks like food was up 0.9%, the
0.6
17th
versus a
consecutive
0.4%
monthly
forecast.
increase. Food at home up
That is
1%,
crazy.
down a little bit from last month, but it is still
Some crazy
a
wins.
significant jump. Energy down 2.7%. People had predicted that. Gasoline down 6.1%. That's in part seasonal adjustment. So it is something that could turn around as we see gasoline prices rise again into
If we can get
the
any
summer.
more.
And shelter increased.
Yep, just cleared another 4 positions there.
0.6%.
Crazy.
Owner's equivalent rent now 0.5%, and that is
Sales amazing. That's the most I've ever done on one particular thing in that what true scalper. I mean, I just got another another 4 positions there.
I'll let you do the markets. I'm looking for the autos. Let me
You keep digging,
looking
Mike.
at that.
Keep digging. I need to pick up on this price action. One number matters right here.
Will it sink? Look at that.
Core CPI 0.6. The previous read 0.3. The median estimate 0.4. The range on Wall Street anywhere from 0.3 to 0.5. No one was anywhere near this, Tom. No one called 0.6.
No.
And that's why this market moves the way it has done. Down 0.25% on the S&P. On the S&P going into this, up 1 full percentage
Told you they
point.
wouldn't get it right.
Lower,
We
but
told you.
4%,
We said they
and
wouldn't get it
on-term
right.
basis at the front end of the yield curve.
Yep.
Your 10
You know they're talking shit on
basis
Bloomberg.
points
Yeah.
after being lower. TK, take a beat. We're up 8 basis points on the front end. Your 2-year up 8, your 3-year up 9, your 5-year up 6.
Berenberg Bank, you mentioned John Holger Schmieding and the great Mickey Levy. These are wow statistics. And John, real
That's with the
average
quickest
weekly earnings
money I've made for a long time.
3.4%
Jesus Christ, man, that was...
stunning. And I wonder, John, not that
Did
the
1,
president
2,
knew the
3, 4,
details,
5,
but
6,
you gotta
7,
wonder
8,
if the
9,
White
10,
House got a heads up on
11,
this
12,
3 or 4 days
13,
ago
14,
to give him 2 days
14
of press
trades.
time to start
14
managing
trades in
this.
3 minutes,
Suggest not a ton
13
changes for
seconds.
the president later because gas prices were where they are. That was already
And of
a massive
course, it all
problem
went
for
the
him.
opposite, dropped
Wall
like a
Street will be
stone.
talking about a 0.6% core CPI month-on-month figure.
I love it.
Main Street will even talk about 8.3. It's down from 8.5 in a previous month. So you've got your peak inflation if it's the 8.5. The problem is we don't have the scale of deceleration, Lisa, that this market economists on Wall Street were looking for. And again, we go back to the start of this morning. It's not about where it peaks, it's about where it plateaus and how much deceleration we get through the
Well, it
series.
hasn't.
This Fed looks set to reassess at the end of August. And right now, 0.6% month-on-month on core is a problem.
If this is deceleration, it's not working. It's
Yeah.
not going to help the Fed in any way, shape, or form. They're going to have to be more aggressive. And the fact that it's coming from rents, the fact that it's coming from wages, the fact that it's going to the fact that companies can keep raising
Not
prices
working, is it, at
and
all?
not meet resistance is something the Fed will need to address that they cannot blame on supply chains and oil shortages.
And Mike McKee, you're wonderful at this. The year-over-year stuff, it's base effects, it's mechanical. The month-on-month, to see that 0.6, Mike, how surprised are you?
I'm not surprised because some analysts had forecast we might see that because of some statistical quirks in the data that do appear to have shown up. The BLS
No shit.
changed its methodology for estimating new car prices.
They got it
and
wrong, man.
Just starting this month, and new car prices went up 1.1%. It had been 0.2, 0.3 beforehand, and so we have a big jump in new car prices that is a methodological change, and will eventually
Look at NAS as well, though.
out of the numbers. Used cars.
You could have picked
fall
a look
again,
at NAS,
so
man.
that are
You
up
just
down
could have picked
0.4.
anything.
So not so bad. Airline fares up 18.6%. Well, if you've been in an airport lately, like I have, everybody's flying. So the airlines are making up some ground there. We also saw natural gas up 3.1%. So seasonally adjusted going the other way from gasoline.
And Michael, I'm looking at one of the interior data points you're expert at, and let's say there's 40.
Again, I'll be on NAS. Look at that, because it's just dropping nicely. RSI just creeping up. We can decide to wait now for the open. We're on neutral support. NAS is nice dropping. What's US 30 doing? US 30 again on our neutral support. So now you just got to wait. This is the danger time. And just
well,
wait.
What we're going to be looking at, besides the month-over-month headline change, is the month-over-month changes in core goods that people buy on a regular basis, try to figure out
the Cleveland
the impact.
Series or the Dallas Series.
Oh, I can't believe people missed out on that. What a trade.
Price is down 0.8% on the month-over-month. So maybe that is some deceleration. And that's what you're going to be looking at.
I love how they're trying to spin it into good news. They fucked up.
And of course, nobody expects it to fall off a cliff. This is by the end of the year, they're hoping to get somewhere between 4 and 5%. So we'll see how this continues to play out. Part of this is going to be
again. You've got stochastic red. You've got RSI red.
Clothing in the stores.
Hold and wait and see. This candle's got another minute to go.
We just got finished with hobnobbing with Fed officials, with academics. We're looking at a surprise to the upside. This is not what they want to see. They say they are data dependent. Is this enough data to change views, to get people to actually be more persistent in terms of the pace and the duration of the rate hikes?
Beautiful,
no,
man.
This isn't going to change anything.
That's crazy. That's one of my best trades ever on. I believe that. That first one, I got $125 in 16 seconds. And then a 60 and a 20. So I was up $250 in 3 trades in 29 seconds.
Even that's what Americans are going to look like. That's what's going to be in the headlines in the newspaper. But people are going. The Fed is going to be looking at where the inflationary pressures are coming from, and they'll disregard gasoline and food.
Mike, a nuanced view from you, as always. Wonderful work. Thank you, buddy. Futures are down by 1/4%. They were higher by about 1% on the S&P. Nasdaq 100 futures are negative 0.7%. Seeing this bleed into the bond market a little bit. 285.
Well, unfortunately, I have to do a little work this morning. I'm going to hop back on here in a little bit, bud.
Yeah, okay, I'll be around and stay in for the open, see what happens. Thanks for joining me, mate. I'll see you in a bit.
Yeah, shouldn't be too long. Should be back quickly.
Great stuff.
Michael Daugherty joins now, Chief Economist, Macro Strategist at MKM Partners. Michael, you and I had a scintillating conversation 5 or 6 days ago about the nominal nature of the American economy. This kind of inflation, if we see it over 1 month,
great, just wait now, see if this breaks this level.
About the combination of real GDP and inflation.
I mean, they've got a heavy support zone. Everything's dropping off the face of the planet. Good time.
So, this is a bit of a shock to the upside. But I'd actually go to the point that,
NAS as well, look.
Made where the peak.
Watch the RSI, watch the stochastic.
Now, on a year-over-year basis, is potentially a lot less important than where these numbers settle or where the plateau is. And if we have really rapid nominal GDP aggregate demand, even if these year-over-year numbers were to come down by half, right, and we settle around 4% or just above that by the end of the year, and it looks like that's the plateau, that's still a major problem for this bond market, a major problem for this Federal Reserve, and as we're seeing, a major problem for the valuations that support.
Well, I hope some of you grabbed some of those trades, because that was amazing. That was some of the best true scalping we've done on a news event. Just absolutely unbelievable. I literally just was clicking as fast as I could to get as many trades away, because that was just one hell of a move that you just don't see very often.
It does need to slow aggregate demand.
Brilliant. I just grabbed another 3. There we go. On that US 30, there we go. Just grabbed another 25, 25, and 21. Another $100 there plus.
Being behind the curve, and then eventually they apply too much braking force later on, and that's typically when you're in a.
Say when you get moves like this, this is like taking candy from a baby. This is as good as it gets.
They've missed the boat a bit here. I think it's pretty obvious.
Now coming down to that heavy support, so we've got to watch out. Keep an eye on the stochastic. While it's staying red, you can hold in the sell if you want. like I say, all my trades are preset at kind of a 80 to 100 pips. As soon as I hit, they'll automatically take me out of the trade when I grab that. So I'm looking for that, you know, $30 a trade and do multiple ones. That's why I can fire off. So I don't have to worry about holding. I can just see the move, get 3 or 4 trades away, let them hit target and come out of the trade, you know, and don't worry too much. Hence no need for a stop loss because they've already hit my profit by the time. So
perhaps underpinning some of the hesitance for a more aggressive approach by Fed Chair Jay Powell. How much do you agree with that the bulk of the inflationary pressures are coming from overseas? From
let's see if this is going to hit that heavy support, so watch out for that. Don't know when we're going to get any retracement, but if we are,
from consumers that still have a lot of cash.
Yeah, you know, it's confusing because we do have these supply.
Hell of a drop, no matter what you traded there. NAS, DAX.
Specifically about those shocks, but
Let's have a quick look at gold. What did gold do?
Nominal GDP backdrop
Dropped off the planet as well.
Robust to supply side shocks, meaning that a supply side shock will change the composition.
Again, you just take your pick. Don't be greedy.
So, you know, we can actually get to a rough and ready answer to that question by looking.
I've done 20 trades on this news.
Previous trend and how much inflation has overshot the previous trend. And if you do that, it looks like 60 to 70% of the inflation overshot.
Gold dropped off the face as well. So again, you could have traded gold.
GDP. If that's not the province of the Fed, why do we even have a Fed? So that is the Fed's responsibility, not the supply shocks. They are real, but this inflationary overshoot in large measure is due to aggregate demand.
Michael, if they politically embed 50 basis point rate hikes and they sort of say, I'm being very sophisticated here, let's see what happens. How far out a trajectory do you see there? If they go 50-50, etc., do they really analyze 2 meetings out in July, or do they go out further before there's a lot of navel gazing over?
You're on heavy support now. Stochastic still red, RSI is 6, so you're still in a bear market, still selling. I'm not going to get in. I've done a lot of trades, and like I say, I don't want to risk anything now. That's been really good.
Well, you know, that might have applied to the last business cycle,
but this cycle looks so far.
Whether it's nominal GDP, inflation, the rapidity of the fall in the unemployment rate. And so the Fed's basically made 2
for a coffee.
One is
wait for pullbacks. What a sell-off though. Perfect. News event just shows you. There'll be like so many traders out there go, why did the market suddenly crashed? Oh, please, why have I lost my account? And they don't even bother to check out the economic news because they're just watching their indicators. It's amazing. You'd be surprised, but it does happen. This is why fundamental trading is the most powerful, because where else do you get moves like this? You know, you might have to wait weeks usually if there was no fundamentals for moves like this. But like I say, we've just bagged ourselves. Well, we started the session on £2,000, and I'm at 2,540, so 540. There you go. What's that? $700? So $700 in 15 minutes of trading. It's not bad.
AWS Outpost brings the cloud right on site.
But, you know, embracing the Phillips curve in the neutral interest rate of the last cycle is just simply not going to cut it. That will lead to a policy mistake and a severe face plant for the U.S. economy.
Or using the axe trading and the fundamental.
Thank you, sir, of MKM Partners. With equities down.
Now we're getting green on the stochastic on US 30, so this is where you would end the sells, get out if you were holding.
Positive this morning by 1.65%. Straight off the back of that number, the wrong kind of upside surprise, snap, move lower. Yields moving higher. They were down. They're now at 4 basis points on a 10-year, much more so at the front end. Great lineup in the next hour to go through this. Priya Misra of TD, Robert Tipp of PGIM, David Leibovitz of JP Morgan TK joining us in the next hour on Bloomberg TV to work our way through this.
Please see the morning. It'll be really quite extraordinary to see, and particularly coming off the president's comments, the politics linking into our economics, our finance, and our investment. Joining us right now, we welcome all of you on radio, television, off the shock of this inflation report. Of course, it harkens back to the middle 60s. It harkens back to other historic moments. We mentioned Carter and 12% inflation of another time and
It
place.
was, look,
Maybe
see,
he was out at Berkeley,
all green as
thinking
well.
over
This is
a
the,
desk, reading his economic books at the time. William Dudley joins us. He's a former New York Fed president and, of course, writing for Bloomberg Opinion, and he has been out.
and this is what it's all about. You see, they can never predict it. Even Bloomberg, you know, which are run by big corporate, you know, they just, yeah, this is why you don't jump in on anything. Would have been nice if I'd held that trade earlier on from NAS. But that's not my style, and that's it. That's the style of trading. You know, we like to hold. Not me.
Not just what their goal is, 2% inflation, but the means to achieve that goal. Chair Powell in his press conference last week didn't really want to.
So NAS there, look, you could have taken some nice. NAS is coming down to the heavy support zone. So again, got green at the bottom of the stochastic, as you can see. So you know, you could have got a sell in around this level here. I did that sell before the open. It just came live. Ended it obviously when you see the green stochastic, then you get the news, you get the bear signal, you get stochastic red, RSI red, and bang, there you go. That's as good as entry as you ever want. And it doesn't matter what you're trading, gold, NAS, cable, oil, that's the setup that you want to be looking for. Price action in conjunction with your indicators. You know, the triggering of a news event, whichever way that might go, got to take the trade. And for me, it was just a case of how many trades I could get away before I got margined out. You know, obviously, tell me you can do 2,000, but you know, pretty. I'm surprised how many trades I got away, because sometimes brokers can be a little bit crafty and not execute all your positions. But you know, 1, 2, 3. 4, 5, 6, 7. 18 positions I took there. 18 positions. So, and even though my levels were preset for take profit, some of them skyrocketed, like I say, 112, 112. You know, that was set to win me $30. It won me 150 because it just spikes so quick that it outdoes the software of your broker. You know, which is good when times are good, but also means you can lose more if it goes the opposite way. That's, you know, even with a stop loss, that's what can happen.
More into balance to actually create more growth later on.
Literally, I started, look back here, I started the session, I was on 2045, but then 2 cheeky trades on NAS as we came live, which took me to 2077, and now I'm at 2540, so there you go. So that's, you know, not bad for 20 minutes, 15 minutes of scalping.
Fascinated by what politicians can do. And if we stretch in our recent memory from LBJ,
I will see if we can continue the winning streak rather, into the open. Now is dangerous time because obviously you're itching to continue. You're in heavy support. The candles, look, the price action is now weakening. RSI is now curling. The stochastic's now green. Leave it alone. Leave it alone. If you missed it, you missed it. There's always another trade. NAS and US 30 are exactly the same. So now we just wait, because we might get a pullback, or we could get a further drop. We don't know. Now it's just minor scalping, which if you choose to take, you can do, but we're better off
on radio and television,
waiting.
An historic moment, and particularly with the inflation-adjusted real wage where it is. William Dudley is with us. He's a former New York Fed president. He has been shocking in his prescience nature of guessing forward on where this price change is going. If you're just just joining us, we're getting used to 8% inflation. Ira Jersey's scheduled to be with us. We're waiting to get Mr. Jersey lined up on a bond market with a 2-year yield.
And remember, we've got the oil news coming up after the open. We might go still around for that, as that's been consistently a good one for us again. It's, you know, I stopped trading it for a while because it was a bit all over the place, but now it's back on course.
Because the real average hourly earnings,
See RSI 12 now.
where people were.
I push down a bit more. I'm not
2.6%,
tempted to take the
as
trade
late as
because, like I
last
say,
month.
we're
So
right on
change
that
there, we're still
heavy
behind
support
inflation.
zone. So
I've talked to a number of Fed officials in the last few days about whether companies are telling them that they are seeing a wage price spiral, and they're seeing
see if we
prices
get a
continue to
pullback.
go up, but they don't feel like they have enormous pressure on them yet to raise prices.
And then, Bill Dudley,
raise
to go to you on this question, I see the wage growth, but I also see the lack of wage growth over the last 15 years or so. Is our fear of a wage spiral different now than it was
The
decades
problem.
ago?
Which wage increases, earnings decrease 3.4%.
Unfilled jobs for every unemployed worker. That's an all-time record. So the labor market's really never been this tight. And the consequence of that should be higher wages. Higher wages.
What a great move then. We got a bear signal. We got everything we needed to take those sales. Like I say, it was just a case of how many trades I could get away. You know, you don't get many news events. This is usually like an NFP trade. And obviously at the moment, inflation is overriding the jobs report. As you know, NFP was okay, but it wasn't like that. That was a one hell of a massive move on all the market.
Fewer opportunities.
So well done for those of you who grabbed some trades.
I mean, I think they're trying to also, sugarcoat this a little bit too. We can basically reduce the demand for labor without increasing unemployment. So there'll be fewer jobs available, but don't worry, you'll get a job because there'll still be enough for you. I think that's, again, sugarcoating, how easy this is going to be. I think at the end of the day, they have to push the unemployment rate up, and that's going to be, painful.
Bill, when we talk about the drivers of inflation, it's one thing for the Fed to respond to a labor market that's hot, to rents that are going up. It's another thing to respond to supply chains that are disrupted and a shortage of goods that ensues therein. Do you think that it doesn't really matter, that the Fed has to reduce demand, and that is the only tool that they have in order to prevent inflation from becoming entrenched in the psyches of Americans?
Well, at the end of the day, the Fed's job is to make sure that demand and supply are aligned. Now, if the supply shock is very
Talking about this for a while.
through it because it knows that supply is going to increase in the future.
There we go. So US 30's reached the heavy support zone. So if it breaks this, obviously we're going lower. But you want to wait for, if you just zoom in on the stochastic so you can see, that's what we're looking for.
Then you're going to have an inflation consequence.
So we only take trades when these sync up. So, for the you who are learning the art of true scalping, so yeah, the stochastic, so when it was red here, so red down the bottom, not as it came out the zone, taking the sell there, then obviously this was the CPI, and you see we nipped in, but then if you missed it, waited for stochastic to go red, came out of it when it flips over, same as here, when it flips over, and now if you're looking for a sell again, it's still red, and still low, but we want stochastic to go red, and then we can take another sell. That's kind of how you run the system based with price. Actually, same here, look. There's green out of the zone and green on stochastic. That was a trade you could there say, and then it went red, so you entered it, and then you went back in again on here. Usually it's nice to wait for it to come over the average line of the RSI first, so I might have waited, might not have taken that one, I might have waited for this position there, look, next one.
Way above 3%. What does that do to the
and if you then
so I think the first thing is people are going to be pricing
trades, look, you see
pricing
that was a winner,
by 2024.
low burner, but it was a winner.
Having a pretty significant
This is all pre-market, but it crept up 10 to 100 to points, and you took another position, and exactly the same, top of that candle, spike there again, another 31, and then this one again, same look, 245, here was your sell, again, 100 to 200 points, and obviously the CPI. So that shows you how powerful it is once you get that confluence of those in conjunction with price action, like the buys, you set on the trend line, chance of pushing up zone, broke the blue zone here, that was a cheeky little one, and then obviously broke back the opposite way below the trend line. So you're using price action, not just indicators, and then they were all nice winners, and that's how you use, system.
It was a little bit of a wow moment. I think that
US 30 now, look. Now it's changed it to neutral support.
So a 0.6 been largely
Become a
because of
daily
the state of
pivot.
affairs is,
Like we're pushing
some people
down.
will look through that a little bit, but I do think that you know we had been so dovish for the
It's
last
all
week
slowed down a
or
little bit
so
now, obviously.
that at this point I think that has to shift. And
See, the
I don't
stochastic
think
closes
we
up,
took out a
which is what you want to
75
see.
chance of a 75
If it
base point
goes red,
afternoon,
then you
but
know
that
you're
doesn't mean
into
that
a
the Fed's not
bear
going to hike 50 basis
move
points
again.
every single meeting this year.
So
What
it's
it means is
quite
we can price in
oversold, so you've got to
another
be careful.
7,500
Wants to
basis
be
points
in and out if you
worth
are
of
going to trade
hikes
it.
by the end of this year, and that's pretty hawkish in general. And that's something like, you know, you just heard.
This is why it's good if you can have this on a separate screen, so you can watch close for if you're those who want to do uber small moves like in and outs on the stochastic with the RSI. You know, easy. You know, when the RSI is green, you just look to take green with stochastic. If the RSI is red, you look to take red. You know, and here we go. Look, red on there. That's US 30.
100 SPX negative 40 points down a stick, and VIX goes the other way, 34.30.
Let's have a look.
Lisa, the VIX a couple days ago touched
Follow it on here.
35 level.
Yeah, you don't want to hang around too much.
And that
Out.
is more volatility. How to play that, though, is a hard call, given the fact that a lot of people are looking at bigger price swings that might be reflected
RSI is
in
low.
that VIX. I do just struggle with the idea of longer-term interest rates being pinned and a yield curve that's inverting, Ira, as we hear Bill Dudley and others talk about the Fed losing the plot, losing the narrative, possibly losing faith.
Right on areas of support. Got to be careful. It's good to watch.
Things happen through the power of the cloud. And virtually every industry is innovating around automation and AI.
Take my oat milk latte. Computer vision and automation help ensure order accuracy. But that
Price action, we're right on our neutral. Messing around on our neutral line.
So regardless of whether it's a restaurant, a manufacturing facility, a healthcare clinic, AWS Outpost brings the cloud right on site.
Precisely.
Because they continue to be behind the curve. What's your view on when that sort of kicks back in? Because right now it seems like there is still a haven
Resistance
for that 10-year.
Yeah, I think that there's a little bit, but it's people. Keep in mind, everyone was in yield curve flatteners almost all year, and that was a consensus trade. Certainly, was our view as well.
They were still looking for some kind of
We
pullback.
had a kind of a flush of some of those kind of trades, so people have to kind of re-engage into those flatteners, and it's hard to do if you've been stopped out of a trade within the last week to get back into those kind of trades. So I think over time, as we get more data and it suggests maybe that the economy is going to be strong and we're going to have inflation that's going
There we go. We just got a nice 3 wins there.
Then you will have probably
On the sell, we've got 26, 24, and 24. That was another $100 on that sell. And I took those trades purely based on that stochastic crossover.
There's all sorts of articles about back even centuries, but certainly back decades. Can you have a capitulation in bonds? Is there a point where people just sell bonds like they sell equities?
Yeah, well, I think there is, and certainly have to remember, you know, we always talk about the treasury market being the risk-free asset, but when you think about, 30-year treasuries, if you look at the price of 30-year treasury today versus the 2-year treasury, the 30-year treasury price is down
Still
more, right?
red
And
on there.
that is just
Going to push down anymore.
more interest rate risk in that space as opposed to the shorter duration 2-year sector. So, we this is unprecedented in terms of negative returns. This will be, if we just were to end the year right now, this would be the worst year for treasuries ever in history. And the reason for that is when you had big moves back in the 1970s, Tom, yields were much
Blue
higher,
zone
so
form
we
now.
were
You
able
see,
to
so if you're in a sell, that's when you'd get out of the trade.
absorb some of the price down moves. Today, we can't do that. The yields are still so low that you get small moves in interest rates and you wind up having negative returns.
Ira Jersey, thank you so much. Just absolutely fascinating within the bond space. He driving all of our Bloomberg intelligence research on fixed income. Lisa,
If it gets a
flat out
down,
extraordinary,
that
flat
down.
out near unexpected.
It shows where the balance of risks were and how much people are jumping on this.
2 minutes left on this candle.
Time that we're going to see such persistent inflation. The equity market move, as notable, frankly, is the bond yield move because it is a knee-jerk reaction lower. Nasdaq leading the way, and to me, the fact that you're in near session lows at one point down near almost 2%, even after all the carnage, even after with the massive correction, shows you how concerned people are about what the repricing
Wrapped
is for truly
in that
persistent
zone now,
inflation that does
possibly.
not return to levels within historic.
I'm going to
recent
use a
historic norms.
cliche, Lisa, here very quickly. We're in original territory in bonds. We've never seen on a percentage basis these price declines. It's original.
30 left. The next candle's the crucial one. If it's red or green, we're going to break back into neutral. We'll try to. Long way. So just keep watching this.
How much are they going to see this last for a longer period of time? And frankly, how behind the curve really is the Federal Reserve?
Dollar strength to 104 on DXY. Euro still at 105, 105.19. Yen, a weaker yen, 130.74. Absolutely extraordinary. Please stay with Bloomberg on radio, on television. Priya Misra and Robert Tipp are next. This is Bloomberg.
Live from New York City this morning. Good morning, good morning. Inflation coming in
Good
hotter
morning.
than expected, and this equity market heading south. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. It is the wrong kind of upside surprise. Shelter, food, airfares and new vehicles all pushing core CPI the wrong way. Let's get straight to Mike McKee for more. Morning, Mike.
Good morning, John. Well, the headline numbers are certainly ugly, or at least more ugly than anticipated, because we were thinking we would get a decline in the year-over-year figures, and we did because of base effects. But on a month-over-month basis, we did not see improvement. You take a look at the numbers. The headline comes in up 0.3%, which is better than the 1.2% in March.
Down.
Core, 0.6%.
Well, that's the result. That's what I want to see.
And the Fed is going to be
nice
concerned about that. Now, when you break it down, it's not as bad as the headline numbers look. Gasoline prices fell 6.1%. That's not going to continue. That's seasonal adjustment factors, but it does suggest that things could get a little bit better because prices are so high already. Apparel prices.
So what's this action? See if there's a chance to get a sell down to the blue zone or not.
Inventories build up and prices don't have to go up. New vehicles help push the numbers up a lot, 1.1%, but that's because the BLS changed its methodology. They count the way they're counting prices is different this month, so it's not a clean series there. And airfares, of course, everybody knows that we're all anxious to get out from COVID and get going out there. Now, the biggest problem that the Fed has had, or at least that the CPI numbers have, is in housing. This is rent prices, and you can see on the right-hand side how they have just soared in recent months. Now, the issue there is we are now seeing, because the Fed has raised rates, mortgage rates starting to kill off demand for housing. We've seen the declines in applications for mortgages. We've seen declines in new home sales, and builders are
if it breaks this neutral resistance, finishes above it, then obviously we're going up. I need to come back down again, probably the open in 20 minutes, who knows.
And houses and cars are the two things the Fed can really affect quickly by raising rates.
Mike McKee, breaking down the number. Mike, thank you. Off the back of this, hotter than expected, the wrong kind of upside surprise. Your bond market looks like this. Your 2-year lower yields higher by 12 basis points to 273. Worth remembering, we were at 285 just last Wednesday on a 2-year. On a 10-year, earlier this week, 320. Right now on a 10-year, up 6 basis points to 3.05%. The bond market reacts to this. It's a hotter than expected inflation report. To respond, TD's Priya Misra, PGIM's Robert Tipp. Priya, first to you.
Is our level here, Evis?
It's a strong report. There's no question. I mean, there's some components of service inflation that were,
and we're back. Just in time for the open.
Nice one, bro. Yeah, all good.
Yep. Everything.
We took a few more cheeky sells we did on US 30.
Oh,
so
gold dropped too.
Everything dropped. Everything dropped through the roof. There was no reversals, no manipulation, no nothing on that. Everything dropped.
DAX took a dive down at 13.5. God.
Yeah.
Is the market's pricing in that the Fed will have to hike more? but there's QT happening.
Good
I
stuff.
would actually highlight what's happened in long and 5-year real rates is starting to impact financial conditions. So I'm actually far more worried about financial conditions or risk assets than bonds. I think the market
Got
should
support now, you
price
see,
in
look.
potentially more hikes. And then if growth starts to slow down when they get to neutral, I think it's going to constrain the Fed's ability to go much above neutral. But right now, the market's just pricing in this impossible task, I think, that the Fed has of trying to get a soft landing, a softish landing, as Chair Powell called it, and trying to contain inflation and bring it back down to 2%. They have to be a lot more tolerant for high inflation for a while because there's lags in terms of when monetary policy impacts growth and then when growth starts to impact inflation.
Robert Tip, your take.
Yeah, I mean, I think there's a bad, a good, and a bad is, the markets are down today. We have high inflation. This is really difficult for people. The good news is,
Brilliant. Got some buys there.
I mean, the market is expecting
4 buys away.
Fed funds rate a year or so from now, and that's probably going to do it. And why would anyone have any confidence in that against such a strong backdrop? Because this is not a typical cycle. This is a reopening. This is a supply chain disruption, and it is almost a comedic rotation.
Jumped in as the RSI and stochastic just came out of the zone.
People are going from goods to
as well on the
normally you look at these
daily neutral support there.
A little bit of this, a little bit of that. This is outrageous. An 18% increase in airfares after 10%, after 5%, after 2%, ramping up as people now want services. And the autos, which were just soaring, there's drops in prices in that component. So people are aggressively shifting. Normally, there is a huge lag. Inflation is very lagging and so on.
Yeah.
But that's not the case here. It's reopening. It's coming right through. This will be a short cycle. These are very attractive nominal yields. I think
went in again. We've got another 4. Beautiful, beautiful, beautiful. Not going to do any more now. Wait.
We caught up with Bill Dudley, the former New York Fed president, just moments ago. He wrote a piece this morning on Bloomberg Opinion. He said the Fed needs to get real about interest rates.
4 buys. That was another 20, 25, 25, and 24. So that was another $150.
What gives you the encouragement that that is where we peak? Somewhere at 2.5, 3, something in and around those kind of levels?
Right. I think a 3% Fed funds rate ought to do it. And but he's right. You're not going to know until you get there.
We have the ability with MT4 to do the same thing you guys do with IC, which is set a take profit and number of pips versus having to manually enter a TP.
That broker I sent you the other day uses C Trader. It was recommended to me. Yeah, use MT4, 5, and C Trader, so you can do exactly the same. And they do leverage up to 1 to 1,000. RoboFX.
Yeah, I'm gonna have to check that out.
Not giving a recommendation, but just saying do your own research. But obviously have a look. But that was recommended to me as a alternative broker for guys in the US. But yes, and also you can do stocks with them as well. And they had a same kind of account, an ECN account, like a raw trading account like IC Markets. But yeah, I noticed they got C Trader. So if you got C Trader, you can do exactly what I'm doing. Have reset, not use MT4. Which is obviously what you want.
That's the biggest disadvantage to most brokers that accept US clients is it's MT4 and MT5. And everybody tells MT5, yes, a little more advanced. But hey, technology. It's just horrible.
It's getting narrower by the minute. Today made it even narrower.
They didn't do anything but put lipstick on a pig whenever they made MT5.
At around 3%.
That's right. Yeah, C Trader's way better. And also I think that RoboFX have got their own trading platform that look quite cool as well. I didn't get a chance to check it out, but I might open a demo account with them and see how I get on. But it looked good. It did look good. There's always a negative to some broker, something, but you've got to take the overall picture. And if they use C Trader, they've got good leverage, then perfect. And the trade had a lot more things they traded than IC Markets.
Wages are not rising as much as inflation.
Yeah.
So the consumer right now is.
But it looks like it was legal in the US. Obviously,
and the fact that the amount that the
You
consumer
want.
is earning or the household sector is actually being
We're about to
included
find out.
every single day when they go to the grocery store. They try
Yeah,
and
I'm
fill
just
their
looking
gas
now as
tank.
well.
So I have to think at some point the consumer starts to
If
struggle.
I
I
can
think
find the
that
dang link.
growth fear has started to get priced in. I think there's a lot more that can happen, which is why, even though I know the curve's flattening today because we're pricing in more hikes, I think, it can actually start to steepen because QT, remember, that's also happening in the background, which I would say to Bill Dudley, how does that tighten financial conditions? QT will continue. The Fed may be
Uboforex.com.
nimble
There
on
you
hikes. They're not going to be
go. 23
below.
cryptos,
That doesn't work on the long
CFDs,
end, which is ultimately going to impact the consumer.
tight spreads, fast order execution for scalping, micro accounts as well. So they do lots 0.01.
Go higher to crimp demand because of the strength of balance sheets. How do you even gauge when this starts to bite?
Right. So we're looking at high frequency indicators. I don't love the savings argument or the accumulated savings.
I can't find that link anywhere.
They're not homogeneously distributed across the
It's just www.roboforex.com.
in the equity market.
Number 4.
Deeper income have higher savings.
No.
So I think we'll be I'm not so
Forex, F-O-R-E-X.
accumulated savings that help the lower
On their ECN account, yeah, you can use MT4, 5C Trader and their web trader.
consumer confidence, retail sales, credit card spending, all the high frequency indicators.
A highest order execution speed.
And interest sensitive sectors. I think we're already seeing
And the stocks trader, they've got their own web platform.
signs of slowing.
Good.
Now, we're not calling for a recession or a soft patch, but financial conditions, I think, have a lot more room to tighten. And that's what will make the Fed nervous once they get to neutral. Right now,
Zero commissions, instant withdrawals, it says.
further above neutral they can get. I think the tightening in conditions will make them nervous to go significantly above neutral because of the impact on the consumer.
We caught up with Mike Dada of MKM Partners immediately after the print. I asked him about how
Does not look like they accept U.S. clients.
to engineer a soft landing. Take a listen.
The Fed has its work cut out for it.
Not allowing me to select United States for my country code.
And typically, starting from behind the curve, the success rate isn't very high, but they've missed the boat.
I don't know where they're based.
I think it's pretty obvious now.
Looks like
They
UK.
missed the boat a bit here. I think it's pretty obvious now. Robert Tipp, I know you take a more constructive view of this.
No, it's a plus 65 number, not UK.
Point. They missed the boat. Can you speak to that?
Yeah, I mean, they have started late. They could have stopped their purchases a lot earlier. That's all true. But there was a big shift in the data. The data really looked like
Singapore.
half of last year, the job growth was moderating, from a
Where?
million jobs
Singapore.
in the middle of last year to 200,000. In February, they revised that to a uniformly strong situation there. So I would cut them some slack. But I think on the soft landing, hard landing, the U.S. economy is a juggernaut. And when you look at the hard
Been going 11 years.
the early 90s, when you look at the early
Regulated.
90s, hard landing, when you look at 2008, those hard landings were preceded by overinvestment, by financial excesses, by accounting fraud. There
Could be
was
to US, surely.
that exploded once the economy slowed.
It doesn't, whenever I put in my telephone number, it doesn't give me the option to select the United States.
I think the Fed has a lot
Their head office is Belize,
move on rates.
or is Central America or Cyprus.
They have a lot of ability, I think, to get this done, even though they are starting late. And I agree with Priya's point. The QT is going to be powerful this time. In the past, when they were doing QT, they were giving forward guidance that they were not going to go too crazy on the rates. That's not really the case here. So I think that's contributing.
Watching that, we're looking at US 30 pullback. Fed.
I think the economy is strong, and I think they're going to have a lot of latitude.
For the open, we're not going to take any more trades at the moment.
Going to be sticking with us. We'll get
Wait for the open.
In just a moment. Futures negative 0.7%. They were positive by more than 1% going into the open about 18 minutes away. With your movers, here's Abby.
John, really a big reversal on that hot.
Yeah, on DAX and all that, you can do 0.01.
Earlier, now down. Now taking most stocks and sectors with it. This, of course, includes tech because as
And
yields back
0.5 euro commission. That's pretty good.
Tech and valuation concerns. Apple
Spread, sorry.
It's going to be interesting to see how all of this shakes out. Banks down, though, also one of this year's conundrums that rising yields not helping banks. Some of the energy names, even with oil higher, are now down just slightly. Occidental, it had been down more. But
It's 0.5 pips. That's all the spread is. Wow. On DAX.
Bitcoin, that is
Really good. Half a pip.
now down 26%. So Lots of red on the screen. It's going to be interesting to see, though, John, how all of this works out with time, given the fact that the markets are so jittery and sometimes these things take.
Is that the right one, Roy?
Maybe cooler heads will prevail as the day goes on, but right now, risk on.
Thank you. Counting you down to that opening bow. Coming up on this program,
No.
President Biden embarking on a countrywide.
Well, that's C Trader, yeah, but that's not them.
This is Bloomberg.
Yeah, because I'm downloading the app, that way I can demo.
Yeah.
Just making sure I got the right app.
Spotware. Yeah, I don't know who they are.
Which one is the C Trader platform?
Don't know if that looks like C Trader or not. I can't see. This is C Trader, isn't it? Yeah. Is that a broker, Spotware?
I don't know. I'm just trying to download the C Trader application. That's what I'm trying to find.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian
Download it off their website and download it as an app. Apple.
Not available.
Has committed $20 billion of investment.
App not available. This app is currently not available in your country or region.
Have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Got this.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
The RSI to break the average line before you take a trade in case it bounces off it now. If it breaks through it, good to buy.
Bloomberg is fastest with the numbers and analysis.
You do have some
That's a shame, that, isn't it? It won't let you in the US.
Bloomberg, the fastest numbers and analysis you trust.
C Trader Mobile, I see. It's the
inflation are outside of our control, to state the obvious. But there are things we can do and we can address and we need to do. That starts with the Federal Reserve, which plays a primary role in fighting inflation in our country. I put forward a highly qualified nominees to lead that institution.
You can start with $10 as well if you want to. Easy.
President Biden embarking on some kind of inflation tour yesterday and again today. The administration condemning the GOP's plans and placing the blame on Putin for higher prices. The White House writing in a statement the following: the president will deliver remarks on Putin's price hike and his administration's actions to support farmers and food processors, lower their costs and lower prices for families. Joining us now is Anne-Marie down in DC. Morning, AMH.
Good morning, John. So as you say, the president on somewhat of an inflation tour. He started off his speech yesterday saying he's giving an inflation speech and it likely won't be his last one. Today, he's really going to talk about the grocery bills and what the administration can potentially do to have farmers produce more
To the
here
open.
in America. And the blame, as you say, is going to be put solely on Russia's invasion of Ukraine. The president will likely
US 30 forming that center W, so we could get a push down again. That's why I'm not entering any positions. RSI is creeping into that neutral so it can range around and we can drop. And obviously we've got the open to see where it takes us.
Going to be, of course, the fact that yes, today's print on inflation is less than last month, but it exceeds the estimates. So maybe we're beyond the peak, but we still have inflationary pressure here in the United States. And that core CPI, Jonathan, that is going to be something that may haunt the president this month, because that is double from what we saw last month.
You saw the editorial in the Wall Street Journal this morning. You sent it to me. I'll share the quote with our audience. Mr. Biden again blamed inflation on the pandemic and Vladimir Putin, admitting that Democrats poured kerosene on the accelerating economic recovery last March with their $1.9 trillion spending plan. It goes on. It reads, inflation was already at 7.9% when Mr. Putin invaded Ukraine. What's the Republican counter to all of this?
Well, that's part of the Republican counter, and this is a brutal editorial from the board at the Wall Street Journal. It caught my attention, Jonathan, because I'm a Seinfeld fan, and they equate the president to George Costanza. But what this editorial is putting forward and what Republicans are saying is that actually it is Democratic policies that maybe are not fully responsible for inflation, because obviously we're coming out of once-in-a-lifetime pandemic, but the fact that they foregoed
The data of the CPI.
a $1.9 trillion stimulus plan that meant people who had jobs were getting stimulus checks. And there was just
CPI is your core
capital in this market, and that
personal, so it's the inflation.
inflationary pressures we were going to see coming out of a pandemic.
MH, the president talks about a kitchen table.
There's your data there.
I would argue they won't be talking about month-on-month core CPI. They'll be talking about gas, 440, diesel, 550 something.
Yep.
That's the real problem at play here, isn't it? A big, big issue for this administration.
There it is, though.
Exactly. Individuals in Washington, lawmakers, they're not going to be talking about the figures that we're looking at every single month. And economists, obviously, in the Treasury are. But the issue is going to be every single day. What
California, look, the highest in the US, 584.
inflation is outstripping that. And you feel it every day, whether you're filling up your gasoline pump or whether you're checking out at the grocery store. Just this morning, it's exactly what my dad called me about. Where he is, it's north of $4.40 for gasoline, and he couldn't believe how quickly it's spiked just in the last few days and weeks. So these are issues that everyday Americans are facing, and this is the problem this administration is facing going into the summer, which is a massive driving season for Americans, and just before those November midterm election, when economists say that inflation is still going to be hovering around 7%.
Anne-Marie, thank you. AMH down in DC. Stay close. We'll catch up with you a little bit later. Priya and Robert back with us for a final word. Priya, here's a tough question. How on earth do you call a bond market in a market environment and with an economic backdrop like the one we're in?
You make sure you have blood pressure medication near you, but beyond that, I think you have to be ready for volatility, because we're dealing with so many shocks at the same time, exogenous shocks. We're dealing with a Fed that is nimble. There is no forward guidance. I guess we got a little bit of forward guidance, couple of 50s. That could be 3, 4 if I would say if service inflation, wage inflation stays high. But I think you take a step back. The Fed is tightening. The market is tightening.
We're waiting to see if it's going to push back up to our baseline. Obviously, if the RSI comes out of the zone, it's a buy, while stochastic is high. But just be careful, because high it could curl down, and RSI could come out of the zone and we'll be selling. So I'm predicting the nice pattern, looking at second leg, but resistance back, so we could come back down to our level, something like this. Not always as nice a pattern as this, but we could have something like this, or like I say, we could have it coming all the way down on the open back down to here,
you have to be nimble.
Robert, I'll give it a final word.
or eventually push it back to our heavy resistance zone. So
269 on a 10-year right now by 3 basis points.
look at the stochastic squeezing. If it starts to squeeze, then it's running out of speed, out of steam, momentum, and you're looking for the red. If you got the red on the RSI, then you could nip in and trade the center leg. Quite a lot of points there.
Yeah, the short term is really a tough call.
But you've got to wait for the confirmations and keep an eye on the clock. Obviously, we're only 5 minutes till the open.
Very moderate growth, moderate inflation, and we are looking at a cumulative impact of a lot of stimulus and a lot of supply chain shocks. Yields have risen a lot, and I think the outlook from here is pretty symmetric, maybe a slight over the long term downside bias to yields. Over the short term, obviously, there could be more upside risk. But yields are up a lot and spreads are out a lot. And so your fixed income products, whether it's high yield or your broad investment grade universe, those nominal yields are really high. And I think overall, this recovery and this temporary boost in inflation, temporary being defined as a few years, is one of the best things.
Remember to wait for the move before you enter.
So, intermediate to longer term, I'm very optimistic.
Robert Tipp, Priya Misra, to the both of you. Thank you. Coming up, the morning calls and later, Wall Street taking sides. Morgan Stanley calling for more pain. Goldman seeing some opportunities. That conversation ahead with JP Morgan's David Leibovitz. This is Bloomberg.
Now this is the same look, same pattern. Again, stochastic is curling. Just got to be careful. Hasn't made the green. As much chance of this staying red, and stochastic coming down for nice. Yeah, could be that. It could be on US 30. Again, to look where the stochastic is. Buy. Could be a buy if RSI comes through, but again, we're looking for a drop. We're on a resistance level. We've got this nice support level to come back to if we need it.
Which is surprising considering what the European
But don't take any positions until we see that open. My advice, if you want to take it, it's up to you.
ESA wants to be a leading force in furthering humanity's mission into space.
If we want to have successful human missions to Mars, we are going to have to.
A nice buy on gold after that news drop.
Yep, we're avoiding gold at the moment.
1838 all the way up to 1849.
Help humanity take its next giant leap.
NAS and US 30 are looking safer because patterns. Going to get a push down on the open. Is it going to break to our baseline and then drop higher? Becomes lower for higher. Same on NAS. Just go higher or coming lower.
It has been brutal, but at least it's not boring. At least there's that. 5 minutes.
He's right.
We're down a third of 1% on the
That's been brutal.
Down 0.8%
Not boring.
on the Nasdaq. That's the price action. Here are your morning calls. First up, Barclays downgrading, calling to equal weight, seeing limited upside due to concerns about consumer end markets. JP Morgan upgrading Planet Fitness to overweight, pointing to improving user trends and lower.
See, look, you've gone red on stochastic. See, if you was in a buy for any reason, this is where you would be ending it.
Following the stock's recent sell-off.
Again, you're on the resistance, center leg. You know how that all plays out. You know how to trade these by now.
Versus Morgan Stanley. We'll find out where JP Morgan stands next with global market strategist David Leibovitz from New York. This is Bloomberg.
We're on the countdown. Here we go. We've got 58 seconds on this candle. Are we going higher or are we going lower? Now, let's see. For me, it'd be nice if the stochastic comes down and the RSI goes red, and then we can get a nice sell center leg before bouncing up. But hey, when did the market ever do what I want it to do?
We can't impose our will on the markets, unfortunately.
I'm willing it. Now it's gone green again, you see now, so but it's closed up, so you just don't know. The open, is this going to be an anti-reaction to the, because usually with higher inflation level, the market goes higher. Obviously, we were pre-market, hence the drops on everything. So this could fly up now. You just, who knows? I'm not saying enter a buy or sell. I'm just saying wait, make your own minds up. Have a look at what's in front of you, and don't make a move until until there is a move. Simple as. Go with the flow, go with the trend. Even if it's a short-lived one. We've got red again, but that's it doesn't indicate where the open's going to go. Here we go.
That's what we live for. Short trends.
That's it.
Are sending pig, cow, and horse manure prices soaring.
We're in, waiting, see, higher,
Fertilizer helps increase crop yields.
right on resistance, so we're not touching anything yet.
Organic material into the compost, so it breaks down, the manure and the straw breaks down.
I have to wait for the next candle even. See.
mixed into your
sap.
your soil in the ground and for growing a whole range of different vegetables.
RSI is always in that. It's in that neutral zone. Just wait it out. You're not going to miss anything.
The kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the
Quite
long
a slow open candle.
Access the financial world.
Waiting, watching. 1 minute 50 left. Size 51.
Policymakers and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Why do the biggest names in business choose Bloomberg? That is a great.
Hey, and we've got some buys. There we go. Right. Got some buys away on that move. Went green and nipped in there. And I got 29, 10, 20, and 20. 4 positions. Do nicely. Just waited for that move. In and out in 10 seconds again. Again, this isn't the real move. This is just the fake out. This is just us went with that push up to that candle there. Spike. Green look wants to push high. You've got our baseline, remember, as resistance. So again, this is why I preset my levels between 50 and 100 points. So if I can't end it quick enough, the system will. But RSI is green. Stochastic is red. So just wait. See, we could, yeah, we're looking for a centre leg W. You can see it's forming nicely. This is going to push higher. We're open. NAS, same way, look. NAS has done the same thing.
Yeah, wild action this morning, John, from those big gains earlier to big losses now. Modest loss on the S&P 500 down about 2.
And we're going to get sell-offs now. NAS is grey and red. And US 30 is green and red. So it's a push on up. Again, buy on the stochastic. Risk to take a buy. Mark that as the open. There at 27. Get that push up. And take the 4 wins on the buy.
But the banks again under pressure, even as yields rise with that hot CPI number. But one area, the top sector on the day, as you know, John, energy.
Watch this RSI 56. Look, is going to going higher. Another retracement. A lot of points, look, a lot of points we can pull. Now it's gone grey. Look, it's back into the zone. So you've got to watch for. That stochastic is red. We want that to go green. Clearly. Let's stick on this. We'll watch this price action.
Stocks there down about 0.5%.
Zoom in.
I'm sure some of you are too. Strategists on Wall Street, Katie Lyons, they're struggling to keep up too.
Feels like this is always the case, John. Where we come into the year is very different than we find ourselves a couple months into it, and therefore everybody runs to play catch up. And that's
There we go.
what has happened in 2020.
Dipping down, look.
When you think about it, back in January, we were trading around 4,700 on the S&P. The average year-end target was 4,982. This morning, we're in and around 4,000, down 16% year to date. It's been even worse for the small cap Russell 2000 and the NASDAQ 100, which are each down 20%. So that leaves a lot of strategists.
Popped off of that resistance area.
Yeah, brilliant. Got some positions away there. Took a loss of $6. Oh my God, didn't get triggered out quick enough, but I got 20, 20, and 20. Another 4 positions that are whacked in there. That's a good thing about having a slightly bigger account. I could just get 4 positions and still have plenty of margin, but there were the sells.
Is the longest stretch going back a decade. So targets are down, John, but the stocks are down even more than that. 97% of S&P companies are below their average price target. The vast majority of them between 10 and 30% below those projections.
Or loss, and that was purely just execution time. I'm going to wait now. Like I say, stochastic look curling down, so you want to see now. We want the confirmation of the RSI, because obviously the RSI can bounce off our average or just mess around in the neutral zone. So let's just wait and see.
That's the view from
Get some red. Going to form that center leg W, which is perfect.
The US equity market is not priced for this slowdown in growth as the Fed continues to tighten policy into a slowing growth environment. Expect decelerating earnings growth.
The open was definitely a buy, 100%. No reason why you shouldn't have taken a buy. Green and green, and you knew where your level was going to be. Now we're just seeing this sell-off. This is the good thing about having now the stochastic as part of our arsenal. Just gives you that extra confidence when to get in and out. Here you go. Look, now you're red and red.
Huge absorption.
If it's going to go down to our neutral support level or thereabouts.
Are starting to look attractive for medium to longer term.
Brilliant. I was in and out there, and I got another 3. Got another 3 sells. 2020 and 21 again. Good thing about having that preset, you see, I haven't got to physically close them myself, and that's where I've screwed up in the past. I think I'm better than the market, and I can hold or whatever, but sometimes you're not quick enough.
I mean, that's what we saw during the first quarter, and so the question to my mind is do things get better from here or do they get worse? And I continue to think that the market is
needed to see that red and red.
You know, if they go by another 50 basis points in June,
that's when you should have been in.
July, that's a lot of tightening over just a couple.
2 minutes left. Be careful now though, because look where we are. Like I said, whenever we get a move, we always happen to be around the neutral zone. Last few days, it's like any other resistance or support line is perfect, but we'll always end up around the neutral, which we know is dangerous. So just be careful. It's going to push down more. RSI 37, 38. Just again, you can measure the gap from that candle down. Plenty of room for some pips. If you're going to enter a trade, enter at the highest point, obviously, of it.
Limitations of supply, and just look at what's gone on in the housing market. I mean, the increase in mortgage rates that we've seen is already cooling activity there, and so I think that the Fed is going to be effective in dealing with the demand side of things. You know, the big question from our
if it's going to push down anymore.
Does the supply side continue to improve here? That's going to take some better news out of China. That's going to take an increase in labor supply, but it does feel like over the course of the next, call it 9 to 12 months, there will be sufficient healing on the private side of the equation for the Fed to be able to achieve
sell there at 20
to a soft landing in 2023.
That's the hope. You know how the year started, where it ended, inflation fears. You could make
sat right on that zone.
Then you move to
nice.
the Fed responds to those inflation
nice
fears.
bit of support.
The argument we've seen the worst of that, perhaps, given the sell-off in the front end and the move we saw higher on 2-year yields through much of this year. That's settled down. Then we move from rate fears to what those rate hikes do to growth fears. Can you make the argument, David, that we have actually seen the growth scare just yet?
So, you know, I do think
28 seconds left on this candle. Stochastic red, RSI 39. Are we going to get a push down again? Or reversal? Let's see.
You know, I do think that growth is going to continue to slow here relative to what people were expecting at the start of the year. You know, a lot of people were calling for 3 to 4% growth.
Sat right on our points of interest.
2 to 3% growth is probably a more reasonable expectation. But, you know, importantly, from our vantage point, the consumer in the United States continues
nice
to
move down, that was.
You can see that in the Chase data, which we monitor on basically a daily basis. And so I do think that when we look at final domestic demand, it's painting a very different
back a little back into the neutral zone. That's what you have to watch out for. That's where you've got to get in and out. So it's good to have preset levels or to click in and out as soon as you get red. That was a legitimate sell. Took that. No problem with that.
17% year to date, the Nasdaq down 26.
Let's have a quick look at NAS.
You know, when we think about what markets are pricing,
same.
I think that there are 2 things to really hone in on. One is this deceleration in growth and concerns that the Fed is going to move much more aggressively than what people perhaps were thinking at the end of last year. I think that the other thing to take into account, however, is that the speed of the move in rates has been very destabilizing. And we went back and looked at what, you know, multi-standard deviation moves in interest rates
bouncing again.
Markets over time. And frankly, if you can't figure out the cost of capital, it becomes very difficult.
No positions open at the moment. We're just waiting to see for the next move. Goes red again. Get in again on some more sells.
Speed with which rates have moved so far year to date. And again, if we can get economic
got 1 minute 40 on this candle.
That should translate into less interest rate volatility. And again, if we can bring interest rate volatility in, I think that sets us up for a fairly constructive back half to the year.
David, what do you think of the bond market moves we've seen? The data's one thing. How the market responds to the data is interesting.
Again, you want to be, you know, if you're in a sell, you wait for the stochastic to go green.
Considering what we've seen
Here behind it.
267, 268. It's off the highs of the year. Your 10-year's only up 2 or 3 basis points, 3.02%. High of the year was earlier this week, 320. What are your thoughts on how we're responding to this information in the bond market? What does that tell you?
So to me, it confirms what we had originally been thinking, which is that there is an awful lot in the price.
1 minute left on this candle.
Markets went from pricing a Fed that was going to move a handful of times this year to pricing a Fed that moves at every meeting for the remainder of 2022 with a handful of 50 basis point hikes mixed in there as well. And so I think that the Fed moving aggressively, again, is very much in the price when we look at yields across the curve. And, you know, frankly, going back to what I was just saying, the speed and the magnitude of the move that was observed during the better part of the first 4 months of this year, I think we're due for some consolidation. You know, markets don't move in straight lines.
I find neutral.
More, as we've seen on
And back in again.
I do think
Really undecided at the moment which way he wants to go.
That moves at every meeting for the rest of the year, moves aggressively at the next couple of meetings, but there's really no reason to believe that the Fed would need to get
Wait this out.
given what we've seen in the economic data as of late.
Remember, we've got the oil news coming up. 48 minutes to go. Final trade of the day. We've done well today.
Microsoft on the year is down 21%. Are you thinking
The account's up to 2644.
We are. You know, here's the way that I think about big tech is we get back to a place
Well, happy
where
with
that
that.
is the trade that investors are in love with, one way or the other. We either have a Fed which successfully slows growth and doesn't cause a recession, but
Be a nice buy now, look.
environment where growth is scarce and people are willing to pay up for all-weather earnings, or the Fed crashes the plane, in which case we're in an environment where growth is also
Change back to
scarce.
green. So if you're in a sell, you'd
Once
sit
again.
there.
And so within tech,
Now we wait for the RSI. It's going to range around in the zone. That center leg W not performing perfectly.
We wouldn't be playing in the highly speculative names that are pricing, you know, some sort of multiple of sales. But, you know, you showed on the board earlier today, the NASDAQ is down 25% so far this year. I saw a chart yesterday, 50% of the stocks in the NASDAQ are down 50% so far year to date. Again, there are some opportunities being created, and this is the same economy that we had prior to the pandemic. This is a 2% economy, and a 2% economy is going to lead investors to pay up for names that are able to generate earnings growth, again, on pretty much an all-weather basis.
Is it a 2% economy with 2%?
We get green on the RSI. Obviously, we're taking buys because we're still within our limits.
What we actually stabilize at.
Fantastic.
For me, the 830 story
Goes red, and this pops red. Then obviously we're going for sales, but we're above our average line now.
Still seeing in core where people think ultimately will stabilize, and that's shifting higher, not lower.
Exactly. I think that's the key point, John. And something that jumped out at me in the inflation report this morning was you saw a lot of upward pressure, or significant upward pressure, on new car prices. I think that reflects continued.
Just trying to recoup some of those losses from inflation news.
Have remained relatively firm. Again, it's going to take time for inflation.
30 doing the same look.
It is possible that we finish this year with a 4 handle on the core measure, and likely, hopefully, I should say, a 2 handle on the core measure by the end of 2023.
That neutral zone.
You're going to have to see the private sector begin to heal. You're going to have to see China begin to open back up, and some relief.
Definitely marking it way open as a buy.
Supply chains. You're going to have to see, you know, labor come back.
Green, we're hitting our baseline. Yeah, nice center leg W forming.
In the United States, if we can't solve the issues on the supply side of the equation, that's what's going to lead inflation to be stickier than expected. And bubbling in the background, the overarching threat to all of this is obviously what goes on with wages. And so it is imperative, in my view, that we figure out how to find these workers that have simply gone missing over the course of the past couple of years. Otherwise, we're going to be looking at an inflation environment that probably continues to surprise to the upside for longer than people were originally thinking.
David, final question, just one more. Your views are pretty in line with what the Fed is forecasting. 4% core PCE year-end, 4.1. Real GDP, 2.8. Into 23, 2.2 on GDP, 2.6 on PCE. I remember sitting down with the former vice chair.
Nice pushed up. Yeah, look at that. So it's beautiful buy now. You should be on.
And we talked about inflation. And we worked through some numbers. It may have been 12 months, whatever the date was. And I remember saying to him, how would you know if you're wrong? When he talked up this transitory inflation story, how would you know?
Going to hit some resistance here.
How would you know if you're wrong? David, what would you look for?
And you've got
How
green,
well
green,
would
and
you
green,
know
so that you should have
your hopes and dreams
buy
for a
there.
soft landing in this economy weren't going to materialize?
So I think we're going to have a pretty good idea by the middle of this year. I think that again, you know, when markets try to look forward from here, the outlook is very cloudy for a lot of us. We've never been in an inflation environment like the one that we currently are in. And so, you know, my thought here is if we get to the middle of the year and you continue to see, you know, very tight labor market, you continue to see lockdowns in China and pressure on the supply chain, that's going to signal to me that we have a bigger problem at hand.
Yeah, I'm
Because
going to
again,
see if this is
the
a.
Fed can control the demand
I don't think it's the
side.
second leg. I think it's going to come back down. So
You can do that through higher rates.
Stochastic is
Higher rates
high.
will fix the supply
RSI
chain,
has
higher
just
rates
only
will
just
bring
come out of the
back
zone, so there's potential to go higher here. Heavy resistance. This is your area. Look, get the retracement. So hang on to that. It's at 3254 zone.
Not just for the end of 2022,
Now this is pretty much lining up the same look. So there.
David, awesome to catch up, buddy. As always, fantastic to get your views. David Leibovitz there of JP Morgan Asset Management. Your equity market down a little bit on the S&P. Pretty much dead flat now on the S&P 500. On the NASDAQ, negative about 0.5%. We're recovering slowly, slowly. Coming up, President Biden embarking on a countrywide inflation tour.
Inflation is our top economic challenge right
Bullish
now.
70%.
I'm taking inflation very seriously, and it's my top domestic priority.
You will hear from the president again a little bit later. That conversation up next.
See if we get a push down now. Breaks this level thing. There you go, it's broken that level. Excellent. Green and green and green.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dinings, shopping, but many shops here are still closed. Most of the outlets.
Nice win, another nice 100, 120 on that one. Aye, perfect. That hit the zone exactly as I said. Now you get out of the trade because you're right against that heavy resistance.
Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential
What
and
a spike.
instrumental.
And that's the way
Yeah.
good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
still are confident the Federal Reserve is going to do its job. But if you keep under promising, what you're going to, what's required, then I think there is a risk to the Fed's credibility down the road.
Push up higher.
Unfortunately for many in America, is alive and well. A hot read on core inflation, putting the Federal Reserve in focus and raising the pressure on President Biden. Bloomberg's Mike McKee back with us for more. Hey, Mike.
Hey, John. Well, a lot of people are criticizing the Fed these days, and you've certainly had them on the show today. Here's what Fed officials are saying behind the scenes. First of all, their policies are working. You take a look at home sales. Mortgage rates have gone way up. Home sales are starting to fall.
Yeah, nice one.
And refi
Nice
has
push up.
fallen off a cliff.
Right, it's on that heavy resistance, so now wait, obviously.
Right now, we're still seeing house prices add a lot to core inflation, but that should start to end as the year goes on. Then you take a look at what they've been saying out in public. And
See, let's just wait, see if it breaks that resistance, or it's going to have a pullback. Just watch the RSI, watch the stochastic closing up. Another nice win on that.
Those aren't really falling behind the curve kind of statements. Chris Waller does say it's not a shock and awe moment. They don't need to raise rates.
See it pulling back, look a little bit.
And Barkin says they don't need a
But it's heavy resistance. Could be a nice centre leg. What do you reckon, Justin? That this is going to be the centre leg, or is this the second? Was that the centre of the leg?
On the show, financial conditions have tightened tremendously.
I don't think US 30 knows what it's going to do right now.
The kind of levels we hadn't.
But it's got to break that trend line to be another buy, that's for sure.
That should start to slow the economy going forward, and that's what the Fed.
If stochastic goes red, then you want to be waiting for a little pullback sell. Let's have a look. We've got half an hour to go to our oil news as well.
It's a fantastic job this week as well, Mike. Thank you very much for going over all the Fed speak this week. I was taught a long time ago from people much smarter than me that there's information in the data and information in how the market responds to that data. The equity market's up 0.8% on the S&P, the Nasdaq up 0.6. We saw a big move initially in the bond market. That fades. Yields at the front end only up 4 basis points now on a 2-year. Your 10-year yield's actually lower. Now for a third straight day, we're down by 2 basis points to 297.
It's going to squeeze.
Damien Sassa of Bloomberg Intelligence into the conversation. Damien, can we start there? Not just with the data.
1 minute left on this candle. So wait. Wait. 1 minute left. Wait for this candle to finish. See where the next one takes us. So we're going to buy, we're going to sell.
CPI running higher than expected and factory gate prices running hotter than expected, that would sort of shred the PBOC's case for further easing, but that's not the case. I mean, most of the inflation uptick in China is due to the lockdown.
Still likes to look at push up.
The core CPI in China has fallen to a 10-month low, Jonathan. And even though factory gate prices did rise,
Look at it fighting that resistance.
They're decelerating on a sequential month-over-month basis. And remember,
On size 69.
Rate cycles are synchronous with realized inflation. And so for me, what this points to, and it gives fuel for the PBOC's case to perhaps reduce the medium-term lending facility by maybe 5 or 10 basis points at the end of this week to re-stimulate the economy because it's hurting so very badly.
Damon, we used to talk about how China and the Chinese economy would export certain dynamics to the rest of the world.
Up.
Do you get the feeling that is true? To a
Going to be a buy. Look at that. Going to end above that.
Yeah,
There we go. Let's see.
I don't believe that China is exporting deflation or inflation to the rest of the world at
Look
this point.
at that.
It's very idiosyncratic, and it's very specific just to the Chinese market. I mean, just this morning, Jonathan, we saw Malaysia unexpected rate hike, 25 basis points, one of the few economies globally that had not moved on interest rates. Last week, we saw India hike unexpectedly by 40 basis points. So now, finally, these inflationary pressures are spilling over into the
Beautiful moves there. Beautiful news. That was another 150. Yes.
China just stands out amongst the rest of the world as the one economy where inflation's kind of coming in a bit, giving some fuel for additional stimulus. So you're absolutely right. Look, I mean, this is kind of a unique situation. I mean, just look at U.S.-China one-year swap spreads. They've turned negative. The last time we saw this was in 2019.
Right, we're going to get a sell now. Look at stochastic. Look at the stochastic squeezing. RSI just backing off. Right on that distance level.
Swap rates above that of China. And that's an unprecedented era. I mean, China's in a very different place today than it was prior to 2008, and so it's very difficult to
basically pull back all the losses from the CPI data now.
One thing that China has engineered this year, or helped to engineer, is that move in the dollar. Contributed to it in a bigger way. Dollar strength. Is that good for the Fed, bad for the Fed? Is that a helping hand, Damien, from your perspective?
Well, obviously, a rising dollar does, fuel inflationary pressures here in the U.S., or at least it should in theory. You know, look, I think it's more than just the PBOC. I think it's the ECB, which gave some color today in terms of the fact that, you know, it is in fact looking to hike rates. It's BOJ policy divergence. You know, there's a number of reasons why the dollar is rising, and I fear that quite a few of those themes have yet to be exhausted, Jonathan. So yes, we do expect dollar strength ahead.
Damien, thank you, buddy. As always, Damien Sasser there of Bloomberg Intelligence. Dario Perkins of TS Lombard in London, also fellow AC Milan fan, has this to say on Twitter. Everyone says the Fed is stuck as it tries to figure out how far to squeeze a booming economy, but what about Europe? No boom, higher inflation, and every time the Fed becomes more hawkish, the situation in Europe just gets worse. Rock, meet
again, is it going to pull back? On red, look on stochastic. Nice little drop. RSI 68, backing up. 24 seconds left, so wait for the next candle.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Like heavy resistance.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using
Castic is
all
still
aspects
red.
of our lives for work, for learning, for communicating, for staying in touch.
Right against that trend line. As we wait for the oil. While we're watching that, we're going to flip over to oil here now. Let's have a look.
Equities actually firmer on
EIA news.
1%. Surprisingly, on the Nasdaq now firmer too, up a third of 1%. Does that tell you more about where we've been or where we're going? That's the price action. Here's your trading diary.
Right.
Light on the
Oh
Fed
yeah,
speak.
oil's
We'll
looking
hear from
really
Wall Street
nice.
again today, then the president again as well. Another round of jobless claims coming up on Thursday, plus more Fed speak from Kashkari and Mester on Friday. And finally, rounding out the week with the University of Michigan Consumer Sentiment Survey. What a busy one. Deep breath from New York City. Thank you for choosing Bloomberg TV. This was the countdown to the open.
They've got no
This
positions.
is Bloomberg.
Very recouped. CPI. Eight seconds left. 6 seconds on the candle. 5-4. Broke through. Nice one. Look at that. All this resistance broke through. Sat on the support.
You might be thinking of stuff like this.
Still be heading back down though.
But there's an incoming revolution on the high seas that isn't quite as sexy, but could
Like
be
it's formed a new
significantly
resistance on there.
Container shipping is the key component of global trade. About
Popping off of it.
80% of
Yeah.
the world's goods
Back.
are transported at sea at some point.
But there's a significant unseen cost
I
to
put
modern
DP in it.
commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
We've got the oil news in 28 minutes. And our live stream with another great day. So we're sat on about 2,750. Pretty good. An hour's worth of, well, 30 minutes. No, an hour's worth of, hour and 90 minutes, sorry. worth of scalping. Well, happy with that. See if we can get a final win on oil. Would be nice. It's 30, just ranging. We run out of steam here. Bullish and rising though, it says 78%, so it might push on up. The Stochastic's still red though. RSI hanging around that 68. There's got a bunch of resistance here and our breakout zone. If it breaks this level, then we're going up to new highs. See, we're just retesting spot here. All run from London, backed off. Broke for the CPI news and then we came to
Pepsi's number fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history. Mainly because
watch this, let's see how this plays out.
Pepsi to print more
30 seconds left on this candle.
The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year. And it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's number fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Ranging look, doesn't know what it's going to do. RSI 66.
$1 million pesos or
5.
doesn't sound like a lot now, but in 19
Trying to break that level. A lot of resistance.
You've got to remember that in the Philippines at the time, the average monthly income was about $100. So $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million
Undecided.
to $14 million. It had a
Nice sell here.
on Pepsi's bottom
Nice buy there. Ow.
Number Fever quickly
Ow.
became Number Hysteria, made Swedes were being jailed for stealing their employers' winning bottle caps.
Bouncing against our trend line. Just got to wait. Thing.
Winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile.
Brilliant. Just got another 60, 70 on that.
There could be big problems ahead.
Any more?
They didn't keep their eye
Final trades on the US 30.
In 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks.
Focused on oil.
On the television news,
Last session today.
the latest winning number, 349. The problem was 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating.
Distance now.
They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 6.
2 minutes left on this candle.
Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured.
Yeah, nice doji. Vision, you can see it's just run out of steam.
In the Philippines,
Plastic still pointing down. RSI still the same kind of level.
Pepsi employees.
Nipping again for another serve. This is broken. Buy is risky unless it breaks out the breakout zone. There's a lot of areas here for it to pull.
She was one of the tragic victims of this whole
9 seconds left.
walking to a nearby store to buy some rice one day.
The oil is back up to 105, so we're going to wait for this. A crude news are saying 20 minutes.
Truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report
Up a little bit. We're still trying to break E level here. Banging its head. Bang, 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 bang.
The MBI, the police department in the Philippines, they
Giving itself a headache.
an interview who claimed that Pepsi
Don't need some aspirin after those touches.
caused riots and to cause trouble outside
20 minutes to the oil.
in order to destabilize the situation.
Should be a quicker result than.
The owners of the coalitions that were
Oh, there we go. Yes, we're in. We're in, and we're going to buy another 75, 76, 70, about $80 there on the sell. Beautiful. That's what happens. You see, price action. You know, when the price action banks its head so many times, it usually goes the reverse way. Usually on the second or third time, will smash through a level. As you can see, it just didn't have it. And what gave me the confidence that we didn't have last week was the stochastic. Without that stochastic, I wouldn't have taken the trade. Because we're in no man's land, as I call it on the RSI, between the overbought and the neutral, so you'd never know which way it's going to go. The stochastic plus price action there gave me that confidence to say this is more than likely going to be a sell. It was. And where do I get out? As soon as it hits the blue zone. Me, like I say, it's 100 pips anyway, even though there's 40 on the table, it doesn't matter. Multiple trades there. So that's took me to 2,820. So a pretty good return. You know, that's 40% in basically under 2 hours of trading. Way more than I expected, thanks to CPI. Wow, that's great. Obviously now we will look, you know, your serious sell is if RSI goes red. These are just little tiny pullbacks. I'm looking at the pattern. I mean, Justin always do as well. That's the key. The wave pattern, there was definitely a buy on your NY open, whichever way you cut it. Eating back all those losses from CPI result. We're just finding it hard. You've got a mountain of resistance here. And our breakout zone, which is our key area. Now, once price breaks above or below these zones, they're good to go for a bigger move. See, can happen this time. So, you know, if you wanted to take a sell now, it's risky. And this wick might fail. It could just range again for a little bit, as it has done. We're on heavy resistance. Ideally, you want to be waiting for it to get back into that neutral zone and break the average level. Waiting game. Here's the next candle. Move down, look, see? Here it is.
Those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 139.
There we go, filled it, beautiful. So you could have gone in for another sell on there. Right, so now we're going to flick over to gold, XTI. Get. Better increase our lot size a little bit. To this. That gives me $5 a pip. So I'm just looking for $10, $50. A couple of trades that will do nicely on oil. Again, it's very fundamental lead at the moment. Green size, buying against a resistance zone, so you have to be careful. Just keep an eye on US 30. Again, so it breaks this level here, then you're going down again. All you've got to do is wait each time for these levels.
You know, they were very careful to say that they were sorry for everything that happened. And we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments. But the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
Down. Candle. Push back up. Rejection off that level. RSI 61. That's the danger, you see. That's why you need it all to sync together. Just doing, you know, we're doing cheeky little pullbacks. You know what we're looking for, but other people don't. So You really want to wait for all the confirmation. Stochastic's down nicely. $40 minutes oil news.
When the news of the bombing came out, it was a
Remember, if you trade in the dollar, it's the opposite to the result. Trading oil, you go with the result, usually. Energy Information Administration, the American, which is API.
Echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
This will be our final trade, and we've done a nice 2-hour stream. Got ourselves, like I say, best part of 40% return on investment. Pull that out, so we'll start again to grow with smaller account challenge. Yeah, that's good. We've taken a lot of positions today, but that's really good. About 30 odd trades or so. But most of them were done during that CPI, which was a very, very rare news event, how that markets reacted to it. So if you're around when these events happen, you've just got to take advantage of them, get in, take the money.
Industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017,
banging its head. Seen happens with US 30, banging it head at that 105 level.
Match days are always special in Dortmund.
Green and green. So again, if you did take a buy here, look when it swung back from the stochastic red to green, back taken handle, it would have swung green. Nice 37 pip move on oil. Perfect.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel,
Have a nice red wine, I think. This a long stream. Back again, like I say, it's 20 past 10, New York. 20 London. 10 minutes to go.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said,
Here we go.
turn on the TV, there was an attack
And down
bus.
gun. There's a Bostic speech later on to watch out for, and then the monthly budget statement. Sometimes can move things if you want to trade that 7 p.m. UK time. Tomorrow, of course, we tend to ignore GDP and all this balance of trade on the UK really is quite unpredictable. Might trade it as it's pre-open. We're trading DAX obviously at 7 AM, the Euro Open. If there's any impact, it'll move the RSI and stochastic if it does, so we'll jump in. But to be honest with you, I don't particularly look at trading those. And tomorrow's all about our usual. We've got your personal spending, CPI, but the main one is continuing jobless claims, kind of what we look at. The PPI here, look, is commodities supplied for personal consumption, capital investment, and export, producer price index. And so basically, price of goods. Again, this will be the one to watch tomorrow. The month on month is the high impact one, but the one I like to trade, and we do trade, is the continuing jobless, but they're all together, lumped in together. It's going to be a tough one. You want everything to go either red or green, basically all the same direction, just to not get a split where we end up with a market that flips all over, and we're pre-open as well, but we'll definitely look at jumping in on that. And then on Friday the 13th, oh my god, is a day not to trade.
Oh boy.
Yeah, Friday the 13th.
See y'all next week.
Yeah, trade at your peril. So I won't be trading Friday. I'm just superstitious, so sorry about that, guys. But Friday will be a day off for me. The main news. Yeah, the Michigan consumer sentiment would be our usual one to trade, but yeah, Friday the 13th. Sorry, guys. I don't walk under ladders. It's just a bit. I don't walk under ladders. Don't like seeing black cats cross in front of me, and I definitely don't do anything major on Friday the 13th, other than I shall be going for a swim and hiding out the way till the day's over. That's just me, and I definitely won't be trading. That's just asking for trouble as far as I'm concerned. If you're not superstitious, then hey, go for it, trade the opens. And but yeah, I'll probably do some mentorship Friday within the group anyway. Instead, I'll go to the gym when I come back, so we might do some lessons inside the group instead. But no, I think tomorrow is the end of trading for me, the trading week.
Friday will be a study day.
Yeah. Look how US 30, look at US 30 reversed, banged its head again. Look, trying to break another level. Your RSI is green. Can't really see what stochastics do. Just gone green. So again, you're not going to be entering a trade while it's in this zone here. It's actually just dangerous. We're looking for a sell ideally. We're looking to come down. But obviously, don't want to. He wants to try and break this level and break our breakout zone and create a new high. Back. Level here. Just stick a line across that. Yeah, so that seems to be the ultimate goal for 30 at the moment, is he wants to get to that there, which is 32578. Bent on doing it, it's nearly there, look. Whereas for me, in terms of price action, it wants to be here, but look at that, the trend line's just drawn in, so there you go, it is doing that. Automatic trend line has just told us now that we are moving to bull territory. A good buy if you want to jump in on that.
Got to get through that pre-market zone first.
Yeah, it was doing its best. Stochastics green, RSI is green. If RSI goes 75, going to break. This is our breakout dotted line here. There's your TP area around here. You want to be out before it hits that if you want to take this trade. But you've got 2 minutes to wait for this candle to finish. Mess around a little bit. If it breaks up on, like I say, waiting for the oil news. Oil for me would be nice if it worse than expected, so we take a drop. We'll see. Oh, we've got 4 minutes to go. Watch this US 30. Interesting.
Gold had served some time in the German military from that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who
Size 71. Trying to do it. I got blown out on the on this zone because look, it tests it. Tried there. Drop. The breakout lines are very, very significant. RX trading. I'll here. Buy here. Range. Oh. Don't be tempted to take any positions. Really broken. Might do on the next candle. But to get in and out before it hits that level. Okay. 40 seconds left.
Gold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety and
Close one. 30 seconds. 29 seconds.
Begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Gold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message,
Backing off, look.
he apparently began planning for this attack in earnest.
The handle's the key.
Gold was charged with
There you go. Blue zone formed. Back up one, so it's selling off without pushing down. Crisscross. Yeah, just leave a wood.
As time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody.
Go. Oil. 2 minutes to go. Final trade of the day on another successful day. Hope you've all enjoyed it and enjoyed that CPI news. Big news. The open wasn't bad either, but the keep saying go to the website www.com if you want to join our group. Information is on there. See you inside the Discord channel. Stay a member, you get access to this trading and to our mentorship help, one-to-ones, Zoom calls. It's all. See price backing off. Look, I would be tempted, but I really want to have a crack at the oil. I'll leave it. You know, but, 2,800 accounts, not a massive account. So be in positions. I get a couple of countdown. Oil has already made its move up. There's going to be a sell look, but again, I'm not going to get fooled into that.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite. And according to NASA, no large object is likely to strike the Earth any time.
Yeah, slippage was great today. Hey, that was the good thing. I mean, I got $125 on a slippage when the TP was 30. So yeah, sometimes the slippage can work in your favour. So yeah, good results. Amazing. Someone in the group is just saying when you've taken your profit, you move to demo, so you don't give it back, and you do. Set whatever your daily target is, and once you've done it, if you want to keep trading, go to demo. Simple. And you ain't going to give it back. The more you trade, even me, the more the chances of giving it back, always. Right, here we go with oil. Good luck. Let's see. 10 seconds. Gas, I'm just on oil.
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events.
Gas looks like.
Where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad that's about, say, a kilometer across is capable of causing very, very wide
Push him
devastation
down.
across the planet. Really
Down.
global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad, and it will have global effects. For objects that are
In
capable
that
of causing what
group.
we call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the
9 a.m. it pushed up from 102.5 all the way to 105.
Cataloging near-Earth objects. In 1994, stargazers watched as Comet
Got that on the
Shoemaker
chart.
hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system.
Use a slow burner this. Well,
Congress tasked
no.
NASA with finding 90% of asteroids and comets.
Red and red and red look. RSI, stochastic.
Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1-kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. The number in billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for millions of years. There is another population, though, that kind of leaks inward and gets into a region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the
Back nicely. That zone.
we know of sort of around 20,
Wait on it.
20,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already
Bad
seen
result
before.
round.
And then once we can calculate the distance to it, we can now start to make predictions about
USD didn't do it. And just sat waiting. Keep an eye on that one. And just ranging, waiting.
Finding asteroids is
Pick up
just
now.
one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits.
Okay, we know this one's along the burn. We can wait for that. See there, look, went down. 27. Dropped. Looking for 10. Dropped 50.
A team of scientists in the Netherlands have found a way that could buy us
A trend line that retraces. I'll take the trade then. All good. Ended up on 22825. That's pretty good. Well happy with that. See if we get anything on the oil. Plays out. I'll be back with the team later on. I'm going to do some one-to-ones which you get inside the group. Thank you as always for trading with me, Justin, and being on board.
Always, brother. Always. Nice, easy day.
Yes, especially on that CPI. It really made it for me.
Yeah.
And once it's trained, you can apply this network to all the known asteroids. And then you can make a selection and saying, hey, these are the ones which seem to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do. It only means that they look very similar to the ones.
Hit the like button, of course.
Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which
See if this pushes up before we get a sell again on here. We'll have a look. You can see this new spike down. Fairly easy one. Missed it, didn't jump on it, so wait and see if it's down anymore. Same as on gas as well if you've got a bigger account. But we've done a couple of hours, so yep. Thanks for joining me. We'll be back next week for more live streams. Like I say, we won't be trading Fridays, it's Friday the 13th, but we'll be trading tomorrow, Thursday, the continuous jobs and the New York Open, doing obviously the Euro and London group. So yeah, until the next live stream, take care all. Thanks for joining me. Spread the word. We love true scalping. In and out, it's the name of the game. And until the next one, take care of yourself. See you later.
Cheers, everybody.